Hi, welcome to the Market Alert for Wednesday, the 10th of June 2020. So the main news today is it's official. The recession began in February. The US has gone into recession, and it says here that the longest economic expansion in American history is officially over. The National Bureau for Economic Research declared on Monday that the recession began in February, which seems slightly odd, given that it was mid-February when the virus took hold, and then March when we had the lockdown. So seems slightly disingenuous as far as this is concerned, and certainly I don't disagree with the fact that we're in a recession. Apart from, I probably do disagree because we're going to be in the greatest depression we've ever seen as a result of the global shutdown. But those of you that have followed the Market Alert for a long time will know that the 3-month and 10-year yield, that many times we've looked at this chart where these lines show a recession, and now I've added this to it, and every time it was preempted by an inversion of the yield curve, which you can see there in red. So I've put this back to February as this is apparently the official narrative, but it certainly didn't start in February, unless of course they're now actually admitting that the growth in the economy had actually evaporated at that point, and it was highly convenient that they had a get out of jail card with the COVID virus in order to shut down the global economy. But anyway, you don't need to worry about that because the stocks continue to move to the upside, barring a bit of a shakeout yesterday and move to the downside. We'll start off with let's start off with the Dow daily. You can see that we had a down day, not a lot to shout about, and then of course overnight prices are starting to move back to the upside. So in the smaller time frame yesterday in the Dow, you can see in the pre-market session, this is where it all kicked off just after I finished recording the Market Alert. Prices started to sell off, and they continued to the downside here. So let's have a look from the high down to yesterday morning's low is 500 points, just thereabouts, and then prices got into a routine and then settled. For the morning we got a bit of a bounce, and here that you can see that we've got the classic retracements coming into the market back to the 62, 78, 89, and then the market once again moving higher above this high here, and then meandering back again, the same retracements. I could draw the retracements all day long on this chart, but for brevity's sake I'm not going to today. But the Dow opened at 230. You can see the markets then tried to move higher, got slammed back down to the low to the left, and you see the green bars there coming in as the market is bought. Got a small retracement here, and then guess what, we're back off. It's not a problem, and again we've got a retracement back 62%, and then we've got a retracement from the high to the low. It comes back in about 78, 62, 78, and then there we've got a double top. It breaks at 89%. It will go back to the double top, and again you see the weakness with the red bar at these points, triggered at this point as well, and just moving over. We don't have any significant volume here because this is lunchtime in New York, but yeah, so we've got the 200 MA, we've got the DP level in place as well. You can see how the market struggled there, and then eventually breaks the 200 MA. But overnight, don't worry, the Fed's got the markets back, and we're back up and heading back to the upside now, having closed above the daily pivot and also the 200 MA there. Meanwhile, in the German DAX, as I mentioned yesterday, there was some potential weakness in the daily chart, and the market traded back down to the 78% retracement. Bit of an increase in volume on the day. But again, if we have a look in the 2-minute chart, move this over, you'll see that the selling came into the market early at 7 a.m. and then continued through in the main part of the trading session, all the way down until we see them buying back in here. We had a trade to the upside that failed, and then followed by a short, of which I took both of these trades. One was a loser, the other one was a 4-1 winner, greater than the loser. And then in the afternoon, the market kicked off again, and we started moving to the upside. This was a break-even trade. This was another losing trade, and then we had the market closing back above the 200 bar moving average. Prices traded sideways for a while, and then eventually broke. And again, they end with some potential weakness in the market, and then we get the classic retracement. Market runs out of steam, and we move back to the downside there again. So a good trading day on the whole there. Say 2 losing trades, but the winning trades far exceeding those of the losing ones. News today, what have we got? Anything? Let's have a look. Just get rid of a few things here, see if we can see. So, oh yes, it's Wednesday, isn't it? The big one is the FOMC meeting minutes, and it's a live one tonight as well. There is a press conference, a quarterly one with Powell, so no wonder the market's attempting to move back to the upside at the moment. So it'll be interesting to see what rhetoric and well, basically lies that he comes out with later this evening. Moving on to other things, let's have a look at the implied volatility. This is interesting, isn't it? You know, investors panic by bankrupt companies, i.e. Hertz, and big tech bonds and whatever, and it's just incredible that this market is continuing to do this. There is an insanity, but there you go. On the implied volatility, yeah, we can see there was a slight increase yesterday. We got close to closing above the 20 bar moving average, which would have sent us back into amber and then into red with a correction. But given the market's up today and Powell is out this evening, I imagine that we're going to remain with a move back to the downside there. So remain under the 20 bar moving average and move back up slightly yesterday, 25.64. So a bit of concern there with the option sellers yesterday. Okay, that will do it for this one. Quick roundup of today's events. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.